As an investor, you want data that gives you a competitive edge in the property market. You need reliable growth forecasts, but you also need to know about cash flow, location, vacancy rates, and more. But how do you find suburbs that meet all your criteria? That's why we built Microburbs Suburb Filter Tool. In this video, I'll show you how this tool narrows down to your most suitable suburb using the most important metrics. It's like an easy to use spreadsheet that you don't have to build yourself. Let me show you how it works. So first, we go and select a region. We cover all of Australia. You can choose many states if you want. Hold down Shift to include many locations, like so. And then go ahead and build and get real estate metrics. So you can see we've gathered together the most important metrics that predict capital growth and yield for your property. So let's start with all important budget. By clicking on this checkbox here, you can see it actually populates this pane here, where you can see a list of all the suburbs, one row per suburb, and you can actually alter your minimum here. So let's say you want to spend between 917 and 1.1 million dollars. You'll see all of the suburbs here match that criteria. Now we can sort, so you can choose what's most important to you. Let's start with the cheapest, Diggers Camp. Now we've got gross yield. So this is the actual return you get each year, how much rental income you get. So if you narrow down here, you'll see it updates this pane here, and it updates these histograms as well here to show you how many suburbs are you restricting when you move these sliders. Let's broaden this out again so I have more to demonstrate. I am going to become open to cheaper suburbs. And now if we sort by median price, we can now see it's starting at only 459 grand. We've got rent, so you can see the median rent. Our smart medians for rent and house price are highly customized to the actual property market at the time. Even in low volume markets, we provide up to the minute ones, and it's not based on transactions that happened years ago, like often with our competitors. Very importantly, you get your annualized growth forecast. I won't show it here because you've got to pay to get this information, but you can specify the range. How much do you want? How much do you want per year? And this is annualized for the next 4 years. So this is compounding growth. Our model, which I will discuss more in another video, has been shown to outperform the market by 7.8%. Since 2010, and the training data goes back to 1990. So it's a highly empirical and accurate model. You've got also 10-year growth. So that's looking at the past 10 years, annualized. How well did it go? You've got months of inventory, which is how long it would take to sell all the properties on the market. If there's a lot of months of inventory on the market, then it's easier for you as a buyer to get in and snap up a bargain because the vendors are having trouble finding buyers. Days on market, similar metric. So the longer it is on the market, the easier it is to snap up a property, less competitive. The proportion of renters. So you might say, let's put renters in here. You might prefer to see suburbs that have fewer renters. So let's say we want to have between 13 and 29% renters here. Often investors don't want to see suburbs that have a very large number of renters because they feel that it won't have the same character. There won't be people to fight for amenities, etc. Land value per square meter. And let's go down. We also have amenity. So the distance to CBD. Lifestyle score. So this is one of our scores where it is based on how much amenity there is for ordinary people, pubs, clubs, restaurants, beaches, parks, etc. The proportion overseas born. So investors often like to follow migrants, and migrants often choose places that are more convenient. We have a HIP score. So this is another one of our livability scores, which is about how progressive a place is. How hip and happening. Risk. So we're very big on due diligence here at Microburbs. So we do a lot of the work for you to run all these checks of government data to see if there was something that could go really wrong with the property, things that might hold back capital growth, or cause you a lot of cost in terms of insurance, or some terrible event. So we have public housing, safety, the proportion that are reliant on welfare, which can inhibit growth, the proportion that are unemployed, single parents, and mortgage stress. And finally, gentrification. So the number of families, private school students. So all these things to do with affluence, an affluence score itself, which is a microburb score that brings that all together. So basically, we've brought together all the stuff that you need to work out which suburb you should buy in. You can choose all these different criteria, include and exclude what you want, sort and filter to your heart's content. And then when you're done, you can actually download the CSV and put that into your favorite spreadsheet. So thank you very much for watching this presentation. We hope that you subscribe to Microburbs to take advantage of this. This is data that is not massively in the mainstream. We're not like the really big guys that everyone copies. So this is stuff to really give you a competitive edge. If you have any questions at all, by all means, get me into a chat, book a video call with me, or write to us in our Contact Us. Thank you very much.